Still on the risk of inaccurately recording transactions in the accounting records, specifically in journals, subsidiary, and general ledgers, the IT controls to address the risk is number one, you can have your input data checks. These are basically your input controls, missing data, alphanumeric, alphabetic check, format check, validity check. Okay, and specifically, if you are particular, if you're pertaining to codes pertaining to your master file, like your vendor uh, number or inventory account number, you can use check digits. We discussed that before. Some of the years, some of the digits and the modules 11. As for the error messages, if there will be mismatches, then the system should uh, prompt error messages. This is very evident, or error messages are evident in SAP. That's why, specifically in your SDKs, it's very difficult to finish that because every time you commit an error, there will be an error message. But in this one, in particular, error messages should be shown if there will be mismatches. For inventory-related transactions, the inventory number in the receiving report should match with the inventory number in the uh, inventory subsidiary ledger when you update the inventory records based on the actual goods received. Otherwise, if it should match, otherwise there should be an error message. Same goes with updating of our liabilities. The vendor number in the supplier's invoice should match with the vendor number in the APSL. Otherwise, there should be a mismatch. As for the automated postings, so the good thing about this one is because in a traditional environment, we do the SOD specifically to this in particular is the third SOD that you subdivide tasks so that uh, fraud necessitates collusion. So for you call this for the accounting records, you separate those who handle the journals, subsidiary ledgers, and GL accounts. This also applies to separating the task in the expenditure cycle. So you separate purchasing with inventory control, with receiving, with AP, with cash disbursement. So as not to lessen the risk pertaining to human feelings, okay? Because human beings are subject to situational pressures and may also be subject to lack of ethical standards. Okay? If you automate the process, the computer program does the tasks. Okay? And the good thing about computer programs is that they are not influenced by situational pressures nor ethical standards. Okay? So if you automate, this will eliminate the one mentioned here on the human element. Okay, reduces the potential for error and fraudulent transactions made by human beings. Uh, Not mentioning the lesser labor-intensive activities. However, take note that the problem for automation or computer logic is that undetected program errors, either errors or fraudulent codes, because a computer program, when you program it, it will do whatever you program it or you tell it to do. You program it to do. If it is programmed properly, it will work properly. But if it is programmed erroneously or fraudulently, then it will do the errors repeatedly, which is devastating. Not to mention its effect or the loss that it may result financially. Okay, and then for the okay, so in addition, so for the undetected program errors, the concern on our SOD is focused on the systems development and program changes. So there should be proper controls there, and there should be separation. Those who handle the new systems development should not handle the program change. And lastly, for the backup, so This just emphasizes that you should back up your files, the accounting records, the SL and the GLs. And the best practice is you back up on a daily basis. The next risk in the expenditure cycle is the risk of misappropriation of cash in inventory. So basically, this the risk of theft uh, for the inventory and theft also for cash or other schemes in order to get cash. For erroneous payments, so it's probable that you pay higher or lower amount, or you pay for goods not ordered or received. For fraudulent transactions, so number one is paying individuals posing as vendors or paying to unauthorized or what do you call this invalid vendors. Again, as for the inventory, it's a theft in the receiving department and warehouse when the goods are received and transferred to the warehouse. First, for the physical controls, number one is supervision. So there should be supervision in the when the goods are received. The head or the boss or the superior should supervise the receiving of goods by the receiving clerk up to the warehouse. Because specifically during DC activities, since it is in this period where the opportunity comes to uh, get an inventory. Okay, and one student mentioned to take it home. Okay, or to take them home. Next is independent verification, a three-way match. As I always mention, you compare the PO with the receiving report RR with the SI supplier's invoice because the PO contains approved quantity and price. The receiving report contains the actual quantity. The supplier's invoice contains the actual price. If these three documents are compared and these match, then we ensure that the uh, the actual quantity received is one also approved and the actual price to be paid is also the price approved. However, as mentioned by our author, he emphasized specific details such as the we look at the PO because this contains the inventories that should only be ordered, and the PO also contains the valid vendor. The RR, which is evidencing the receipt of goods, the quantity, the condition, and the product itself should be reckoned or matched with the PO so as to signify the legitimacy of the obligation. Because if you just look at the receiving report, this only shows you that you received the goods. But comparing it to the PO, this uh, tells that the goods actually received is a legitimate, or the goods actually received are a legitimate purchase and should be paid. As for the supplier's invoice, you match it with the receiving report and the PO because the supplier invoice, the values there should be the one to be reflected in the AP. And the prices in the supplier's invoice should be the same or at least reasonable compared to the PO, if not the same. As for the SOD, so this is quite simple. So the inventory control, which is recording, should be separate from the inventory warehouse, which is the custody. For the accounts payable, this should be separate from the cash disbursements. Accounts payable approves the payment, or the cash disbursement processes the payment. So combining these two can create the individual can create fraudulent liabilities to associate or to familiar persons or to related persons uh, acting as a vendor and then writes check to that vendor. For the IT controls, automated three-way match. So when all information, EPO information, receiving report information are encoded in the system, and then when the supplier's invoice are encoded, the system automatically performs a three-way match. But take note, at times the system is too strict, and there are certain uh, three-way matches that will be disapproved, that needs to be approved on a case-to-case basis. So override can be done, but take note that the override should only be done by the supervisor and it should be documented. For the multi-level security, so since different individuals and departments access the system. There should be limited access pertaining to those in the AP department, in the cash disbursement department, as a form of SOD. As for the last risk, last but not the least, risk of unauthorized access to accounting records and reports. Earlier, it is the risk of the incorrect uh, inputs to the accounting records and reports. So our concern is that there should be limited access, or persons who access the accounting records should be limited. Not only from outsiders, but also from employees who try to perpetrate fraud. Usually, accounting records are used to hide misappropriation of assets such as cash and inventory. Or at times, if they do not misappropriate, they would just like to sabotage the company, corrupt the files, and delete the files. Okay. As for the physical controls versus the access control, you just limit the access to documents to those who need to have the access. Okay. Specifically, you separate the access for the PR, PO, RR. For the PR, of course, the PR department and the PO should access this one. For the PO, there are various departments who need to access the PO. But for the RR, the receiving department, the inventory control, the AP should have access to this one. But basically, this fee should not go to the GL. Okay? Because more access to few or to single person, he has more power, and basically, if you have more power, you have more chances of doing a fraud. For the SOD, you separate journals, subsidiary ledger, and GL. These actually pertain to the third level or third type of SOD, which I appreciate in this one. It tells us that we need to separate those who handle journals, SL, and GL, which is advantageous because if uh, these three if these three accounting records are only handled by one person, if he will call you to the one who has custody, then he can immediately perpetrate fraud. But if the GL only handles the GL and others handle the journals and SL, and GL will connive with the custody, the one who handles the custody, to perpetrate fraud, then it will be more difficult because those who handle the journal SL9 may uh, catch the GL, or the one in the GL department. It is mentioned that by separating tasks, for example, separating those who access journals, SL and GL, may not eliminate, but at least it will reduce the risk of fraud. Why? Because the more people involved, the more difficult it is to collude because you need to talk to a lot of people, and the more the people involved, the greater the risk of detection. Okay, as compared if you're only the one who knows the fraud or doing the fraudulent activity. As for the IT control, so strong password policy or strong or password control, strong password control can assist on this one. For example, the password policy, the length, the complexity, the changing of passwords frequently. And as for the multi-level security, we've discussed this one, ACLD, uh, access control list. You give access to specific persons, or the RBAC, the role-based access control, meaning you give access to certain position. For example, if there are three persons who are acting as AP clerks, so one access to an AP clerk. And then multi-level security, you limit access to certain departments pertaining to their job descriptions. So in this slide, this just summarizes what we discussed. So you can see here, so the risk that we have discussed, okay, the related physical controls and IT controls. So at least at a glance you can look at this one, but the details you can go to the slides that we've discussed. So I added details there as compared to the original one, and then you can also go into the details in your reference text. Okay, so the last part of our discussion for the video, specifically for this fourth video, is on reengineering using EDI. So the concept of EDI, or electronic data interchange, is that we automate. This is the highest level of automation. Okay, from basic technology to the advanced technology to EDI. So basically here, we don't have any purchase order because the system of the company is connected to the system of the vendor supplier. So there's an automatic purchasing involved here. Okay, since there is no human intervention, so we can eliminate the discrepancies due to human activities or human errors. However, the important or the key document here is that the trading partner agreement. So there should be agreement on specific items, more particularly the documents or information that can be accessed by the vendor from us, or the information that we can access from them. The key features of EDI is that there's no hard copy PO. The PO is digital, like this one. And then, since the quantity and quality, okay, of the goods are guaranteed through the trading partner, cursory inspection is also needed. When you speak of cursory, light inspection, so not heavy. And then the key feature here is that in EDI, there's no vendor invoice. That's why there's no three-way match. In the first place, why do you don't need a vendor invoice anymore? Then the vendor invoice contains the total amount to be paid. However, since the uh, price per unit is known in advance through the agreement, and then there's a receiving report, you just multiply the price agreed in advance and the actual goods and receiving report. You can now have the vendor invoice. Okay, so, or you can have an information equivalent to the vendor invoice without the actual vendor invoice. So you can eliminate that. And if you can eliminate vendor invoice, you just need two documents, the PO and the receiving report. That's why you only perform a two-way match, not three-way match. And then, since this is automated, payments are done through the most automated way, through electronic fund transfer or telegraphic transfer. Okay, here a last slide for the for chapter 5 is some organizations who implement the EDI goes to the or some organizations go to the next level. They eliminate the receiving function. Okay, as I mentioned too, this is the receiving and shipping the receiving function or receiving activities in the purchasing and the shipping and delivery activities in the revenue are the most difficult to automate. But in this example, it is completely removed because the objective is to move away with the receiving activities so that avoids delays in the production and the associated handling costs. However, the accounting auditing issues is that how to account for the vendor receipts since there will be no receiving, hence no receiving report. So what you can do is that to base it on the parts, number of parts per finished goods and the number of finished goods produced. Okay, you get the number of parts per finished goods and multiply it with the number of finished goods produced. You can get the total receipts per vendor on the assumption that we have one supplier per part. As for the scrap, since it does not form part of the finished goods and it is not accounted or counted, so how will the vendors be paid for the goods received pertaining to the scrap? So there's a separate accounting procedure for that. Okay, and the two key issues for or risk for EDI is that we ensure the validity of transactions. Transactions between two trading partners may not be valid. And and the next item is that unauthorized access to the records. Okay, not only by those who are not authorized, but those who are specifically the non-trading partners, but also the trading partners. It's possible that the company is a trading partner, but he does not have access to a specific file of us or information of us. So we need to keep them away from accessing those files. With that, thank you and good day.